Welcome back, my awesome people. I am honored to be joined with Will Rhind. Again, he's been on this channel twice already. This is the third time from Granite Shares. He's going to be introducing us to one of the most unique ETFs, TSYY, ticker symbol. And I'm not going to spoil it, but he will give you all the details. Will, how are you doing today?
Yeah, not too bad, Jacob. Good to be on the show. Thank you.
Definitely. You've been a big hit on this channel. I've been requested to have you on many times, and I'm glad that we're able to do this. I know it's been a busy day, busy week, busy couple weeks, so I'm glad you're able to sit down with me here today.
Good.
So let's just get right into it. For those that did not see the previous interviews with you, can you just tell us a little bit about yourself, who you are, a bit about Granite Shares, its history and core mission?
Yeah, no, absolutely. So I'm Will Rhind, founder and CEO of Granite Shares. We're an ETF issuer, so we create ETFs, manage ETFs, and distribute ETFs. That's all we do. We're a global business headquartered in New York City. We manage around $8 billion in multiple strategies, obviously US, Europe, and Asia as well. And one of the things that we do, which some people might know us for, is we created a new category of ETF called leveraged single stocks. And so we do leveraged ETFs on single companies like Tesla, Nvidia. So we have the largest range of those in the market, and we're the market leader by assets under management.
Perfect. And can you just, as you mentioned, your strategy is leverage. Can you just tell us more about what does leverage mean, especially for those that don't know, and who is leveraged investments for?
Yeah, so leveraged, simply put, is borrowing money to increase your exposure to a given asset or index. So in the context of an ETF, majority of ETFs you buy or any ETF you buy that's unleveraged just gives you one for one exposure. If you buy a leveraged ETF on Tesla, like our TSLR, or leveraged ETF on Nvidia, like our NVDL, you're getting two for one exposure. So you put in $1, you get $2 worth of exposure. And if the price of the underlying asset, in this case Tesla, goes up by 10% in a day, then the ETF will go up by 20%. So this is important because while you're amplifying your gains, if it goes in the right direction, that's all great. But if it goes in the wrong direction, the risk of leverage is you amplify your losses. So it's 2x the return on the downside as well as the upside. So it's very important when you're using any kind of leverage, whether it's a loan of any sort, or it's even a mortgage for your house, that it's fine when it's going in the right direction, but it amplifies losses if it goes in the opposite direction.
So, my viewers, if you really believe in a company, in a stock, leverage could be for you. Me personally, I believe in Tesla. I believe in Nvidia. Right now, they might be going through a little moment, but in the long term, hey, why not double your exposure? All right, Will. So let's get right into it. So, can you tell us more about your recent edition of the YieldBoost, which focuses on Tesla, ticker symbol TSYY, and why did Granite Shares decide to launch this ETF?
Yeah, so Granite Shares has really been a pioneer in leverage single stocks, which, as we just talked about, is leverage on single companies, both two times long and in some cases two times short. And what YieldBoost is a new family of ETFs we've created, which is designed to maximize income or yield, sometimes off single stocks and off other times off broad indices. So right now we have three ETFs that are out there in the YieldBoost family. The first one we launched was the TSYY, which the underlying is linked to Tesla. So TSYY, the unique sort of selling proposition with something like a TSYY and the YieldBoost family more broadly is that it sells options, in our case, put options on underlying leverage single stock ETFs linked to Tesla. The reason for doing that is if you think about the something called the implied volatility on Tesla stock, which is a level of volatility which indicates the amount of premium that you can earn If you have leverage, then all things being equal, you could get, say, 2 times the amount of premium or 2 times the implied volatility. So with that, you have higher probability of increasing the yield. So it's just twofold. It does increasing the amount of yield that you can get, but also tries to offer some protection against NAV decay or against extreme downside movements by executing a put spread strategy. So not only are we selling puts to generate the yield, but we're buying a put to offer some protection against extreme movements to the downside. So all of that being said, we paid a distribution at the end of February, and that on an annualized basis was just over 160%. So unbelievable amount of yield that can be generated from these products. And that's the TSYY. So again, the unique proposition with YieldBoost is it's trying to marry very high levels of yield, but also offer some protection against extreme downside movements through this put spread strategy. And we have a similar product for the SPY and the Q. So the NASDAQ and S&P 500, again, linked to levered ETFs offered on those particular indices.
Yeah, and when I first saw the distribution from last month, it was incredible. I believe it was about $2.50 per share that investors got in their return, and I thought it was unbelievable, which is amazing as well. And of course, when it comes to these type of ETFs, what are the main risks associated? I know you said with leverage, if it goes down 10%, in the regular stock with leverage, it will go down 20%. But what other risk could be possible with this ETF or with yield boost suites in general?
So yield boosters, they're not leveraged ETFs. They are put selling strategies, put spread strategies. So they just sell options
Okay.
and buy options. So the risk for yield boost principally, just like any other options strategy, is that the underlying goes down over time and goes down whereby the protection that you have is not enough to protect you against those downside movements. So what's been happening, of course, is the market has been, pretty much in a downdraft here, at least for Tesla since December or so of last year. So it's been a sort of constant wave of selling pressure, which does affect the underlying. But like anything, the underlying stock can go down, and that's your sort of principal risk, really, that you're exposed to those market movements. Now, the upside, of course, is that you're earning that premium, you're earning that yield. In the case of Yield Boost, you have some exposure to the upside, as well as some protection against extreme downside movements. But for the most part, the risk is that the underlying goes down, just like any stock market investment.
And as you said, it is an options play with puts. And I know with options, volatility, it's its best friend. What do you think about volatility with this ETF? So right now, Tesla has been going downwards, which is pretty much the overall market, crypto, other stocks, especially the NASDAQ, the tech sector in general. How is this affecting the underlying stock and also the Yield Boost ETF when it comes to volatility?
So just in terms of volatility, I mean, all things being equal, the higher the volatility, the more the yield that we'll be able to generate, or the more that we'll be able to pay in terms of premium. So from that perspective, you're looking for a higher volatility, and you can amplify that further by selling options on leveraged ETFs, which will generate more volatility than options on underlying stocks. So that's the reason we chose this particular strategy, is to generate that level of yield. So that's good. The bad part, of course, with volatility that we're experiencing, at least in the moment, it seems like that's resulting in pretty much all stocks directed to the downside, as opposed to, up days, down days, up days, down
Yeah.
days. So hopefully we'll get through this sort of wave of selling pressure that we've seen. But for now, high yields, but the flip side is that the underlying is also falling.
That is definitely understandable. I know right now we're just going through this little short-term hiccup with pretty much everything across the board. Now, focusing more on Tesla and the EV sector. Of course, China EV sector is popping up. EV companies are popping up everywhere. When it comes to competition, how do you see the long-term vision for Tesla with all this competitors coming up?
Well, I think that's one of the principal things that the bears will jump out and present as being, core to the bear thesis on Tesla is that, how can you really compete in a world where you have Chinese EVs that are being manufactured for a fraction of the price? And while tariffs, trade protections, etc., maybe will probably spare the company from the worst of those particular concerns, that is clearly a big concern, and has certainly been a contributor to loss of market share in key markets like China, where of course the domestic EV production or domestic producers can sell as many cars as they want to whoever they want.
I agree. I mean, with any product, there's always going to be competition. It's all about kind of rising up from it. And the one thing that I do love about Tesla in itself is because Tesla's not only just a car company, right? They have software, they're coming out with solar panels, they have the robots. So pretty much investing in Tesla doesn't just mean cars, but you're investing in the overall ecosystem of Tesla. So now looking at Elon Musk, for example, he's heavily tied with Tesla. However, he does have some distractions, such as, Twitter, formerly X, formerly known as Twitter. He has SpaceX, and now currently he's in the White House. How do you think that his leadership and his vision will affect Tesla in the long run?
That's a key question. At the moment, the market would tell you that it is affecting Tesla. And I think Tesla stock has declined every week that he's officially been in the White House. So there's definitely some concerns about his time spent in the White House or in government versus running Tesla. And I think that's reflected a little bit in the stock price and some of the concerns around the company at the moment. Now, we've been here before with Tesla. We've been here before, arguably many times, with different episodes, albeit not his role in government, but different Musk-driven episodes for the company over the past few years. And the company's always managed to turn that corner and sort of rally back. So that is the big question this time is if and or when he diverts his attention more full time to Tesla or back towards Tesla, will that sort of result in a recovery? Now, I think one of the reasons that people were so bullish about Tesla, when of course he announced that he was sort of supporting Trump heavily, and then obviously had a sort of integral role in the administration, is that autonomous driving is really the key to unlock, a lot of value for Tesla, potentially $1 trillion worth of market cap plus in terms of that stock. So it's a key part now. The key to locking autonomous is not necessarily the technology, but it's the regulatory side of it. So the argument being that his involvement with Trump and the administration would clear a pathway to autonomous here in the US and potentially in other sort of at least Western markets as well. So that I think is still the big or core to the big bull case on Tesla. And I think if that was to start happening, potentially sometime this year even, we could see a big uplift in the stock. But I think right now the Tesla story, the Musk story is kind of caught up in the broader noise around uncertainty around the tariff policies or the trade policies of the US. And clearly, if we were just talking about Tesla, it'd be one thing, but we're not. We're talking about pretty much every stock in the market, at least the large technology companies and others, as the market sells off in reaction to the uncertainty around trade.
I definitely agree with you on that, especially with Elon Musk in the White House. He is able to pass certain legislations or have an influence on it to make it easier for the general public to bypass some red tape that he probably didn't like in the past administration that was kind of locking him up. And so personally, I'm a Tesla fan. I'm all the way, I'm a Tesla long, and that is my vision as well. I think maybe this year, maybe early next year, he will start cutting the red tape when it comes to environmentally friendly cars, autonomous cars, especially now. Like I'm in Canada, of course. We already have, or we just started having electric Zambonis, the ice rink cleaners. We have electric buses. So Tesla in general here is a big name, and I'm sure in the United States it's definitely going to be even a bigger name, especially with the bigger population that you have. So if we're looking at not just the Tesla ecosystem, but we're looking at electric cars in general, do you think electric cars in the United States will make a massive impact? What is holding it back? Because I read some statistic that only about 5 to 10% of the United States was kind of going with the electric I guess wave, but what is holding it back? Is it like, because here in Canada we have chargers. That's our big problem. We don't have enough chargers. It's not readily available yet. What are your thoughts on that?
I think that really the biggest or the most obvious answer to your question is price.
Okay.
And it's the price of the new vehicles. And then now, as people are starting to realize, it's the price of the used vehicles if you're an owner. So the price of EVs has plummeted quite significantly in terms of their used value. And so I think that puts off some people. Now, it's a bit difficult to say because you've got to be a little bit cautious because it's affecting cars more broadly. There's clearly been huge inflation in terms of new vehicle prices or car prices more broadly since COVID. And so I think that's something that has resulted in consumer behavior being more conservative. In terms of wanting to go out and buy a new vehicle. We've also had auto financing rates go through the roof because of high interest rates. So when people were, locked into low interest rate loans or leases on cars before, those have gone up, significantly. So again, that's caused demand destruction in the sector. And then lastly, the used car prices went up massively after COVID because of the first two that I mentioned. And so while those are starting to come down, it still creates a situation where I think the demand picture for all vehicles is still uncertain. But of course, people will focus on Tesla because they're the market leader. I think that the demand is solid for EVs more broadly. I don't think the trend is going to reverse. I think that you're going to see more EVs. Certainly, I see it all the time. I think it's just a question of getting through this market environment where we're still living with interest rates a lot higher, financing rates higher, lease rates higher, new vehicle prices higher, and people are sort of have to digest that.
Yeah, and that's exactly what we are going through here as well. Used cars are pretty much almost the same price as a brand new car, especially with the lockdowns, and of course now we have these tariffs. And so TSYY, how does this help diversify an investor's portfolio? Even though it is a single stock ETF, what is the diversification that an investor can get from it?
I mean, look, there's a strong argument to say that what all investors are looking for at its simplistic level is a combination of capital growth and income. So clearly, something like TSYY falls very squarely on the income side or the yield side. And then there are plenty of other mechanisms for people to get capital growth, whether it be on the extreme end, levered ETFs, or just on a more regular basis, investing in Tesla stock or investing in growth technology funds, etc. So I think it's that marriage of the two. And what we've seen is more people moving away from traditional sources of income, like bonds, where people have been burnt over the last few years in rising interest rate environment and are looking for other ways to generate income and ideally trying to attach income to some of these growth names. So saying, okay, I want, tech stocks, for example, but want to earn some income or some yield off of those names. And that's where we've seen something like TSYY come in.
I agree with that. The traditional, I guess, breakdown of investing of, 30% bonds, 30% stocks, 20% treasuries, that's kind of a thing of the past. Most investors these days, especially the younger generation, they're gung ho about a stock and they want to get extra benefits from it. And the cool thing about TSYY is I haven't seen any other Tesla leverage ETF out there. So this definitely is highly unique. And my viewers, you always talk about Tesla, you love Tesla, and if you're that confident, show your true colors. Start investing in these type of ETFs where the vision is long and not just a quick flip. So Will, what was the initial response when TSYY came out? Were people or investors kind of running for it, or was it more of, let's see, what was the reaction?
I think the reaction for Yield Boost more broadly has been hugely positive. You could argue to some degree that we've been unlucky a little bit in timing because we launched TSYY, I think, on the absolute top print day for Tesla. So we've been, in a downward sort of downward price action ever since. So I think that has clouded a little bit of it, that we just aren't in the same investing environment right now as we were, coming into the end of last year, at least for November, after the election was announced. That being said, it's still one of the most popular pages that we have on the website. People are really interested, I think, to learn more about it and understand, why invest in something like Yield Boost over competitors like YieldMax, etc. So it's something that I think when people start to see the yields, which of course we couldn't do for a month, till we paid the first distribution at the end of January and then this distribution at the end of February. I think when people start to see the yields that are being generated, then you start to pay more attention to it.
Yeah, and you mentioned yield max. I actually saw a video the other day where they were comparing TSYY and the yield max, and the overall consensus was TSYY actually had a much better return. So that's why I was excited to do this interview, because I
Yeah.
really wanted to ask those questions. And so what factors do you think, whether it's micro or macro, that could influence the automotive sector in general? So of course we talked about tariffs, China, but because I know some people are moving away from combustible engine. Other companies like the big three, Ford, Chrysler, GM, they're going into the EV sector, but it's not as, as the boss of as Tesla is. What other factors do you think could affect the automotive sector in general?
I think there are really two things. There's at the macro level, it's the trade policy clearly in tariffs, because manufacturing, global manufacturing, or auto manufacturing is global, and there are parts of the business that will be less affected. There are other parts that will be much more affected by any kind of trade or tariff wars. And then there's the financial component to it, which is that we still have very high interest rates, and we still have an environment where we have restrictive policy and financial conditions which are tighter than people perhaps used to over the last 10 years. So I think it's those combinations, or the two combinations, of where we have to have more certainty around what's going on trade-wise, tariff-wise, and how that impacts obviously consumer prices of vehicles, auto parts, etc. And then the other part is just the financing leg of it itself. So interest rates coming down, providing the ability to perhaps afford these vehicles or finance these vehicles at a more affordable rate. And I think we need those two things really to happen.
Yeah, I agree. These interest rates are killing us, especially with just buying even just a pre-owned car. The interest rates are through the roof. And now looking at Tesla as a whole. So of course it's a car company, autonomous driving. But then looking at the other sectors, especially with AI, solar panels, of course, SpaceX is not Tesla, but it is kind of in there. What other asset classes or sectors within the Tesla ecosystem do you think can help Tesla get to that next level, especially with cars?
Yeah, outside of the just regular deliveries and people looking for, Tesla to make more vehicles, which is always going to be at the core of it. We're talking about a release of a sub $35,000 vehicle, which the market's excited about, and the prospects for like another hit, in terms of that. But I think more broadly, it's autonomous and AI. That's really the key to unlock that mega growth. I mean, other parts of the business are growing nicely. The battery business, the energy business, energy storage business, is growing nicely. There are other opportunities, including things like Optimus, which again could unlock a lot of value. However, I think what most people are really focused on is the autonomous slash AI opportunity that comes with robotaxi, and just the potential for self-driving or autonomous more broadly.
Yeah, I'm definitely looking forward to the autonomous world where you just get into a car, click a button, and it takes you where you need to go without having a conversation with the driver. For the future of Granite Shares, what other yield boost ETFs are maybe in the works, something that might come out this year, maybe next year? What sectors would you like to include further in the yield boost suites?
So we have 20 funds that are approved, of which we've launched the three. We've launched the Tesla, we've launched the Triple Q and the SPY. So NASDAQ 100, S&P 500, and Tesla linked products. So I think from here we have other sectors, things like semiconductors, gold miners, other individual stocks such as Nvidia, Bitcoin even. So there's a lot of different things that we'd like to bring out. I think part of that be guided by what investors see as being a priority, of which people can contact us and clearly say we want this, that, or the other. But in this environment, I think there'll be those that are very interested in something like the YSPY, which is the S&P one, or the TQQY, which is the NASDAQ linked one, and generating a high yield off those type of options. And then obviously the single stocks will be even higher just because the volatility and the applied volatility on single names, particularly levered single names, is a lot higher. But hopefully, we can build out the family and it be, a great sort of fund family, for anybody who's into options-based income.
And I think that's something a lot of my viewers will be looking forward to because it does take some skill, some really good skill to do options in general, whether you're puts or shorts. Options is not for everybody, and so this is a much easier way to get into
That's
a
right.
single stock, get the exposure of an options trade.
Yeah, another thing, Jacob, is
Yeah,
that people can't do this themselves, which is
no.
slightly rare for ETF strategies because although a lot of people wouldn't want to buy the 500 names in the S&P 500 as a silly example and rebalance them themselves, they could do it if they really wanted to. Whereas for the option strategies that we deploy, they're custom options, which are not listed, and therefore they're options that regular investors wouldn't be able to trade or wouldn't be able to access anyway. So it's sort of packaging that up in an institutional, options-based option strategy, and then being able to sell that to the mass market, which is the key.
Exactly. And that is why I love these type of ETFs where the average investor, beginning investor loves a stock, hears all about the money made on options, but doesn't know how to do the options. And ETFs like this, especially with the amazing distribution that you have, the distribution yield, I mean, you can't go wrong with it, especially if you're planning to go long. So Will, I have to ask, you did mention Bitcoin maybe. A few years ago, obviously institutional investors and investments stayed away from it. Nobody wanted to touch crypto. In the past few weeks with the new administration, they're all about it with the Bitcoin reserve. Other countries, other corporations are starting a reserve as well. So I have to ask, you did say you may or may not go into crypto, but what are your thoughts on cryptocurrency now? With the future of Bitcoin, maybe yield boost Bitcoin, as you maybe have mentioned. What do you think about that?
Yes, I think the look the if you want sort of extreme yields, then a yield boost product on Bitcoin is probably going to be up there, in terms of the highest amount of yield possible. So that's certainly for all of those people that love the yield. That's probably where you're going to get the most yield because of the volatility of the asset. I mean, I think from our perspective, we've had a lot of success on the levered single stock side using stocks for crypto stocks. So Coinbase, Cornell, for example, the 2x Coinbase. We have a Mara, 2x Mara product out there. So we've done that in the space. I think on the YieldBoost side, unlocking the Bitcoin will certainly be of interest to people that are looking for those high yields. And I think, more broadly, it shouldn't really be our job to sort of say what investment people should buy or shouldn't buy. It's really up to us to create products that give people the options or give people,
You're listening to the
access to things
people.
that they want, and listening to what customers want. And so we know that customers want Bitcoin. Now that's not everybody, but clearly people like crypto. There's a market for it, and that market. I don't see any way that market is going to change. And like you said, with a lot of the sort of positive talk from the administration about crypto reserves and such, like it looks like it's going to sort of cement its place fully. So does that mean it's going to be up and down? Of course, but there's going to be demand for an asset like that that's volatile, just like other things in the market.
And the volatility plays in your favor, especially when you're doing the options and the leverages. So no, I mean, I'm looking forward to that because, ETFs, crypto ETFs are popping up everywhere. However, some are, kind of doing good and some are doing amazing depending on the strategy that you use.
Yeah.
So Will, I love the information that you shared with us today, but before we end, is there any last mentions, anything significant coming up with Granite Shares, with any of your suites that you would like to put out there to the digital world, to my viewers?
Yeah, I think just please, for those that are watching, please subscribe to our Substack. If you just Google Granite Shares Substack, we're on X, on LinkedIn, etc. So please follow us on X, where you'll get updated information on any new product launches that we come out with. We're always launching new funds, particularly in the levered single stocks place, and now the YieldBoost funds. So we just launched the two broad index based ones in the last week or so. So we're going to be doing more. And like I said, if you follow us on social media, we're also on YouTube as well, the High Conviction podcast from Granite Shares. It's a good way to stay up to date with everything that we're doing.
Okay, perfect. I will, my viewers, I will definitely have all of Granite Shares information in the description box. So please check them out. As I keep saying, as Will said, this is a one of a kind opportunity. Get in while it's now, because who knows what happens in a year or two. There could be 100 different type of ETFs that pop up. So get to the one that beat the market first. So Will, thank you for joining me today. I know
Yeah, no problem.
it's a busy day for all of us,
Yeah.
especially with the markets. And you've given us some amazing knowledge, not only about TSYY, but also just the overall Tesla and overall car market out there. And my viewers, you will see Will on this channel again. We would love to continue the journey, follow on the more suites that come up, especially the ones that are making a difference and will maximize your gains. So make sure you like and subscribe, and definitely check out Granite Shares. As I said, I'll have all the information in the description box. So until next time, stay ranting.